Hey guys, welcome to the webinar. I'll be starting in just a few moments. I'm just getting all set up here. We'll get cracking in just a moment, but thank you all for attending, and hopefully you'll get something out of it. Hey guys, welcome to the webinar. I'll be starting in just a few moments. I'm just getting all set up. So I'm not sure why my camera's not working, but it's not. It's all right. You're not missing anything, I promise you. All right, Kai says sound is all good. Thanks, Annette from Southern California. So great to see you all. We have over 200 attendees right now. I expect that to grow. I'm just going to give this a couple of minutes to allow for everybody to get a chance to get on here. So it looks like we've got a great participation here, over 230 people thus far. I'm just going to give this a few minutes and then I'll get cracking. So Peter says, good to be here. Good to have you, Peter. Thanks for that, very optimistic outlook. So we have 250 attendees thus far and growing. I'm just going to give this another minute or two, and and then we'll get going. Vin says, thank you for sharing your time. You're welcome. I actually really get a thrill out of this. I get to meet people all over the world. I think it's a very legitimate question, in the back of everybody's mind. If I was sitting on this webinar and, I had somebody say they had, 4 decades of experience, which I do, and I'm going to show you some of my trades, which have made me a lot of money, then, the corresponding question is, why the heck would you be doing this? And it's because I really enjoy giving back. I know some people, are going to be skeptical. That's all right. You have a right to be. There's a lot of misrepresentation out there. There's a lot of scammers out there, frankly. I got into this business to try and, be one of the good guys and wave the white flag. And, again, hopefully you'll be able to understand just from how I kind of piece everything together that this is as real as a heart attack. Everything I do, everything I tell you, you guys to do, I'm doing myself in the market. So, those that can, those that can teach and those that can do. And, I like to think that I can do a little bit of both. So we have 291 attendees. So why don't I just get started and then, everybody can join in as they check in. So, welcome one and all to this 4-day trade execution webinar series. This is day 1. I'll be doing this each day at 4 p.m. Eastern Standard Time, Monday through Thursday. And really, when I thought about what I do and try to, simplify it, really what I do is I try and take a piece out of the middle of monster moves in the markets. And I think this is really what separates, my methodology from what you're being exposed out there. I think most people certainly who are trading the FX markets are trading extremely short term. They're being, sold on these robots, these, expert advisors that you plug into a MetaTrader and away you go. And, I don't know if that would make sense to you. It certainly doesn't make sense to me that I could buy something for $350 or $600 or even $900 that I'm just going to plug in and it's going to, make me profits, into infinity. I assure you, if something like that, out there worked, Goldman Sachs and JP Morgan would, pay that guy $10 billion for his secret. So it's just kind of counterintuitive. And then they show you these profit charts that compound, 100% every month. And, if you added that out into infinity, you'd have an account bigger than the GDP of the United States. So nothing about those things make any sense. And so what I try and do, instead of, darting in and out like a rabbit, running out of a tree hunting for nuts, is that I look for big moves that are going to occur in the market. Recently I started telling our members about the pound New Zealand dollar when it was at 185, that it had a double bottom and it was going to go higher. And it just sat there for months and did nothing. And now we're trading at 198, 1,300 pips higher. And so what I'm trying to do is take 500 pips, 800 pips, 1,000 pips out of moves like that. And I know that sounds incredible. I have people on my website that said, Mark, before I met you, I never made 100 pips in my life. I don't take a trade unless I can make 150 pips. So I'm going to talk about, all of that, over the next 4 days. But I think before I do, maybe I should just introduce myself. My name again is Mark Shawson, the patent trader. I started this business about 5 years ago, really to share, the acquired knowledge that I've gained over 4 decades of trading. Now, I started my trading career way back when I was a junior at one of the best business schools in the country, University of Southern California out in Los Angeles. It's a private school. And, I had some great teachers. One of my best teachers, I remember his name was Ken Treffs. He was actually an investor, and he only took $1 from the school because he made so much as an investor that he just wanted to give back by teaching. He really enjoyed connecting with people. And that was my best class. But, Ken taught me how to look at investments by breaking them apart, by looking at a company and looking at the PE ratio and the sales turnover and inquiring about the management and doing all kinds of this stuff, what we call fundamental analysis. And I was really enjoying that. But right around the same time, my dad was doing business with an investment banker. My dad was raising money for a drive-through animal park called Lion Country Safari out in Irvine, California. And he met an investment banker by the name of Graham Loving. Now, I couldn't make, a name like that up. Graham Loving was a very idiosyncratic guy. He used to work for the IRS. He was an accountant for the IRS. He was an investment banker. He had an eye patch over his eye. Very quirky dude. But during the time, that he met my dad, he was actively trading the commodity futures markets. Now, this was, I hate to admit it, way back in the late 1970s. This was the first time that interest rates soared to 21%. Gold ran to $1,000. Silver ran to $50. Brothers by the name of the Hunt brothers had cornered the silver market. Soybeans were going crazy. Pork bellies were going nuts. It was really like the biggest inflation bump we had ever had in the United States. We had a couple of oil embargoes, and it was just a very exciting time. And, Graham was making hundreds of thousands and millions of dollars trading in and out of like orange juice and cocoa and live hogs and T-bond futures. And he was trading about 18 different markets at the same time. And, coming from my college background, I was wondering, how can you evaluate all of these markets and come up with, buy, sell, recommendations, or how can you make moves on that? So it wasn't really, how much Graham was making. It was how he was doing it that was really intriguing me. Now, remember, this was before the time of the internet, before the time of, fancy charting services. You'd just go down to the corner drugstore, buy some graph paper, plot an X and Y axis, for price and time, put a live hogs at the top of it. And then he would, chart the, just the closes. He would kind of make a very crude thing, 68, 70, 72, and then chart how live hogs, closed at the end of each day. And after 3 weeks, he saw like patterns emerging. And he used to say to me, Mark, I just want to buy markets that are going up and sell markets that are going down. Now, I'm not the brightest dude in the world. And so that really appealed to me. It's like, that's a logic that a 6-year-old could understand. And that, that to me is in life, the simple things are the best. If you look at Apple, they drilled their whole business plan to the most simple thing. Their designs are the most elegant and simple. And that was Steve Jobs' brilliance, was just drilling down things to the most simplest basis. And, that's really, I think, what I've tried to do by saying I take a piece out of the middle of monster moves in the market. Very simple. Gold moved down 19, from $2,100 to $1,700 in the last 6 months. And I took a huge chunk out of that, $150 out of the middle of that $400 move. And that's really what I try and do. So from the early teachings that Graham taught me about what we call technical analysis, which is really just the study of price action, price movements, and price patterns. Over 4 decades, I kind of evolved this 4-step trading methodology that starts with, identifying what a market's doing, what kind of phase or environment is a market in. So you open up a chart and immediately you say to yourself, is this thing going up? Is it going down? If it's trending, then you want to just try and get, in sync with the trend. If it's going to turn, there's always some pattern that forms before the turn. I think this is really my strategic advantage, is where I can really identify major turns in the market. I did that 4 weeks ago in the NASDAQ, where I picked the exact top of the NASDAQ and made 7 figures. I made $1 million in 2 weeks. I'm going to show you that in just a moment. No kidding. I'm not, and I know it sounds incredible. I'm going to show you the actual trade blotters and whatnot. But to my mind, the markets, by virtue of price action and price patterns, give a couple of tells and indicate and point where they want to go. And so it's kind of taken me 4 decades to build this mousetrap where I figure not only am I really great at identifying monster moves in the markets, but I think I also understand where the traps and the pitfalls are. And that, that's actually the biggest thing, because the market kind of lays out these things and then it doesn't show its cards right away. And then you fall into these traps, you blow out your account, and then the market moves in your favor. So over the next couple of days, I'm just going to share with you, my ideas, how I view the markets from a price action, price pattern standpoint. And that's basically, when I say that's all I look at, that's all I look at. So I don't look at the news. I don't read newspapers. I don't sit on blogs. I don't sit in forums. I don't look at the BBC or the local financial channel and see what the expert's trying to tell me. To me, the market tells you where it wants to go. And I think the biggest challenge of traders today in this environment where we have so much information, in fact, we have too much information, that it's information overload. And to my mind, if you're just objective and look at price, the markets will tell you where they want to go. The markets are inherently a discounting mechanism, meaning they are ahead of the news. They are ahead of the events. So they're shaping out patterns and price action before something actually happens. And I've been trading decades, and it still blows my mind how, the markets are able to do this. And that to me is why I love trading. It just, never, ceases to amaze me. How markets, start tracing out things, and then 3 weeks, 3 months, or 9 months down the road, we figure out why the market was turning. And the market was already telling us way before it actually happened. So, I'm going to, just try and work my way through. I'm going to take your questions. And before I do that, let me just kind of show you, an example of what I do, how I do it, and what the outcome is. So, as I indicated, these are emails that, I send out every day or every week. In this case, this email went out on Sunday, February 21st. I was looking at this NASDAQ chart. I'll blow up the real-time chart. I know it's very difficult to see here, but really what occurred here was that we had a key reversal where the market went and made an absolute new high for that week, and then it closed on the very low of the week. Now that reversal in a vacuum, wouldn't have been, something that I would fully invest in, but it's where that reversal occurred. So you could see it was tracing out, this ascending, broadening price pattern. And again, I know it's hard to see. It starts out very narrow and then it widens at the top. And I surmised that right at the top here, that we were going to come and penetrate the lower end of the support level of this ascending, broadening price pattern. And, again, I share my ideas, but I assure you, I eat my own cooking. I put my money where my mouth is. And, on that Friday, so every Friday I do a couple of hour webinar called the Master Pattern Trader. We have several hundred people around the world that have been on this program for many, many years, every Friday at 11 a.m. Eastern time. I check in and then go through all of the markets, share what I'm thinking, look at all the patterns. And I started to break apart this NASDAQ, and then I started to get into the daily, and there was 5 different bear patterns that were coming together all at once. And so when I got off that master pattern trader on February 19th, so it was really 2 days before this, I started helping myself to a fistful of put options. Now, put option is a bet that a market is going to decline. So in this case, I was betting that the NASDAQ, because of that key reversal at the top of an ascending broadening price pattern. Are you guys able to see my screen? So a lot of people say yes, some are saying, okay. So some are saying you can't see it. So if you're not, seeing video well, then maybe you should just, switch your browser and refresh, because everyone's saying, yeah, they can see. So this was on February 19th, right after I got off that master pattern trader, and I thought that the NASDAQ had peaked. And so I started buying put options in this ETF called the triple Qs, the QQQs. Now, this is an ETF that, is a proxy for the NASDAQ. All the, big NASDAQ tech stocks are in this thing. And so if you want to follow the NASDAQ, you would buy the triple Qs. However, I thought the NASDAQs were going to go down. So I bought these leveraged options, these leveraged instruments called, put options. And a put is really a bet that the market's going to decline. Now, when I bought these put options, the QQQs on February 19th were trading at a price of 334. Now you can see that I bought these options with a 320 strike price that was expiring 1 week after I put them on. This means that if the market didn't go lower and through my strike price 14 points lower, I would lose every dollar that I put up. In this case, it was about $80,000 that I would have just put in the trash can if I was wrong. And I bought a total of 350 for around $1. Now, each put option, the underlying option is based on 100 shares. So you have to multiply this dollar by 100 shares. So I paid approximately $100 for that one option. And you can see I bought 200 of them in that order, 100 of them in that order, and 50. So all told, I spent $35,500 on this option series that if I was wrong, and again, it had to go from 334 through 320. That's about a 7% move. So I was betting that the market had to put on a monster move 1 week later, or I was going to lose all of this money. And I guarantee you, believe me, after I put this on over the weekend, I was chastising myself like, how could you do this? You're out of your mind. But, I got so excited by the opportunity, and I'll share with you why. And so this is basically what happened. On Friday, I put these things on at about $1. And Monday, the market crashed. Tuesday, the market went through the 320. The QQQs actually went from 334 all the way to 310 on Tuesday, February 23rd. You can go and check it. And so my options that I bought for $1 went to $10. And by the time I could bail out, I got out of some for $5.85, some for $5.75, some for $6.31, and some for $8.10. Now, remember, I paid $1 for this. I made 800% in 2 days on these options. So all told, I made about 560% in 2 days. That 35,500 went to 195,800. Now, I did the same thing on another account. So I made about 400 grand in 2 days. Now, I rolled forward and did exactly the same thing the week following. Now, the interesting thing, people say, well, this is just a screenshot. You could dummy these up. But when I was doing these trades, I was on one of these webinars, these 4-part webinar series where every day I told people what I was doing. And then every day we'd come and see how it worked out. So you could call me a scammer. You could call me, whatever. But I did this in front of like 1,000 people. So what happened was Monday, March 1st, I started bailing back into these QQQ put options. I bet that the market was going to continue going down. So I bought the 307. Remember, the week before I was at 320. I bought 450 of these things. it cost me $61,000. And because the market went against me, I lost 50% of what I put up in one day. From Monday to Tuesday, I lost 50%. And that's the thing with, options. They are weapons of financial destruction. They can wipe you out in, minutes. And so by the end of that day, based on all of, my activities, I was, short BYND. I was long the SQQQs, which is also a bet on the NASDAQ going down. I was also long another series of put options. On Tuesday, I was down $24,000 based on collectively all of these positions. By Wednesday, I was up $142,000. So about $165,000 swing. And you can see that these options, which the day before were at a $28,000 loss, were now at almost a $60,000 gain because the market went up so considerably. I'm sorry, the puts, went up, the market went down. And then you can see I had 450 of these. By the time, Thursday came around, I blew out of 300 of them, took monster profits, and I still had $348,000. So I went from minus 24,000 on Tuesday to plus 348,000 plus the profits that I took from this. And I made another $500,000 that week. And I'm not shitting you. This is as real as a heart attack. People can say anything they want. This is all made up. Be very hard to dummy up all of these prices and make this up. And I don't know of any demo stock program that allows you to trade options like this and do this. So I assure you, this is my account and it's as real as it comes. So I don't show this to brag. I'm showing you, if you learn how the market really works, that you can make yourself some money in the market. There's an ocean of money out there. And I'm going to show you how to leverage what the market tells you and make yourself a piss pot full of dough. So this is an example of XAU USD. This is a ticker symbol for spot gold. This was on January 10th. So we're almost 3 months later. And you can see, and so again, this was my email that went out on that Sunday. This was where the market was. This is what I was pointing at the time. I was pointing at this ascending, broadening triangle where you can see the highs are connected by this upsloping line. The lows are connecting by this other one. And I had my arrow right there that was my potential target between 1650 and 1700. And guess what? We went to $1,677 or $1,671 last week. So this was back in January. I was telling our members to get short at $1,867 based on an ascending, broadening bear price pattern. Remember, this is a time where JP Morgan says gold's going to 3,000. Everybody's saying it's going higher. Very difficult to stand back and say, I'm looking at this objectively and I can see this thing only going lower. And I said, based on last week's massive key reversal pointing in the direction gold is going to go lower. I said my target objective is 1,700. Now remember, this was back 3 months ago, way before we had any visibility. And gold went under 1,700 to 1,680. And then I advised to add to the trade. You can see that gold was making its way down. I advised our members to add to the trade. So a month later, Sunday, February 21, I had a sell limit of 1797. Same thing, the ascending, broadening. We're going to go lower in the short run. And all told, I made over 600 grand on those bets. This, is something that I still have alive in the market right now. I still told our members way back, at the 185, where you see this double bottom right here, this key reversal to get long at 193.37 on the pound versus New Zealand dollar. This is about a month ago, based on double bottom price patterns. I said, based on my observation, of the same double bottom that I saw in a stock called Lyft, I think this is going to do the same thing. And then this hung out for about a month, did nothing, up, down, sideways. And this is the difference. I hang in these trades. I don't just get out when a trade goes 80 points against me. And so I have 3 open trades right now in pound versus New Zealand dollar. This was the current price, I don't know, until whatever, 20 minutes before the webinar. And I have current open profits of about 100 grand. And I'm going to stay in these positions because I think it's going to go a lot higher. And I'll talk about that. This was the setup over the weekend in the stock Zoom, ticker symbol ZM, where I said sell short at 325. It went to 313 today, came back. I got out because it came back so much, but you can see that I had a boatload of Zoom. I was short 4,000 at a cost of $1.3 million, and I made $33,000 on that account, and then I had 1,500 in this account for a value of 481. So I had about almost $2 million bet on this stock going down, and it did go down most of the day, and then it came back, and I just bailed out, and I booked these profits. I made about 50 grand on the day in Zoom. This was a stock called KTOS, where I was saying buy it at 30 bucks, buy it at 33. And here you can see I bought the options and I was up $47,000 on those options, on those call options. You can see that I was also betting on the price of Lyft going up, and I'll talk about that in a moment. So this was, my trade that really kind of started me off about 2 months ago. My account was at about, 15% lower. And this is what I talk about continuously, that trading is a process. That sometimes markets go through days, weeks where, just kind of goes through a funky phase, and you may not be performing well. And prior to this trade, I was down about 15 or 20% in my account. And I know it well because I had surgery the day before I put this trade on. So I know exactly where I was, what I was doing, and what was happening at that time. And so based on a huge double bottom on the long-term chart as well as the short-term chart, I started just lining up and teeing off on this stock. I bought the shares, the options around the $45 price level. You can see I said there was a double bottom on the near term and the 3-year time frames. I said penetration above the inside bar would likely result in a huge thrust to the upside. So this was 2 months ago when the stock was 45. Today we're at 65. So we're up, 30% since I put out that signal. And my broker doesn't do like FX where they show the P&L. So I like to show everything that I'm trying to do, that I do, but I can't get from my broker the perfect where I bought it, where I sold it, and what the profit is. So I just want to show you that I bought the crap out of the shares. You can see I bought 5,000 shares at $45.68, 1,000 shares at $45.20, 2,000 shares at $45.09, 1,000 at $45.76. Day traded 3,000 shares in there. Basically, I held on to 7,500 shares from approximately 46 bucks to $58, and I made $90,000 just on the shares that I held. Then at the same time that I was buying those shares, I was buying the call options, the Lyft call options, the $46 call options, and the $47 call options. I remember I bought the $46 for under $1, 92 cents, and I bought the 47s for $1.10. That was on a Monday. By Friday, this thing that I bought for 92 cents closed at $7. I made over 700% in 1 week. And you can see here was the execution at $7. I sold 150 of these. So I sold 15 and 15. So I got out of some at a lower price and then bailed out of the rest on a limit at $7 and the other ones at $6. And I made 760% and 454% respectively on those bets in just a few days. So when I see a move, sometimes I'll buy options also because it's a very leveraged way of taking advantage of something if I think there's going to be a huge pop in the market. So I guess before I continue, maybe I should just get some feedback from you guys. See if there are any questions. Payam says it's an honor to be here. Thank you for that, Payam. I'm really honored to have you. So based on what you've seen, is there any feedback or, anything, that you'd like to say before I kind of show you how I actually generated all of these profits? So, I'm trying to just show you that this stuff works. If you apply it, you can make money. Now, the thing is, what I try and do is identify big moves in the market. So, I saw Lyft at 45 bucks and now it's 65 bucks. I saw a short in gold at 1900 and it went to 1670. And so all I'm trying to do is take a piece out of the middle of those big moves. And as it turns out, I took out just about everything those moves had to offer. But all I need to do is do this a couple times a year. So I don't need to trade every 15 minutes to try and make 400 bucks here and 700 bucks there and 15, so I don't, I can sit back now and wait 3 months for the next move. And this is kind of a different, I think, process and a different way of looking at the markets. And, I guess when you're done with this, you have to ask yourself, really, what am I in, what am I trying to achieve? What are my goals, in trading? And, everyone would say, well, that's a crazy question. Of course, I'm just trying to make some money. But then I would come back at you and say, really, is it? Or do you like the bump or the rush or the action? If I told you couldn't trade for the next 3 months, could you do it? Could you, let's say I just say, the markets look choppy, just going to sit it out. I've made a couple $1 million. I'm just going to wait till like September, October when, I get into the winter season. Could you do that? Most of you couldn't, because you want the rush, the excitement that comes from trading. And look, I love it more than anything else. There's no more rush than making $1 million in 2 days or $500,000 in 2 days, as I did twice, 2 weeks in a row. That was a rush, but I got to tell you, I've kind of gotten to the point where I kind of look at trading from the point of view of the aesthetics, the point of view of the setup. Is this setup, something that, grabs me or doesn't it? I don't really think of trading in terms of money anymore. And people can say, well, it's easy to say because, you've made money. And that might be true. But I think I've just gotten to a stage where I just look at trades in terms of setups. Profit, risk, opportunity. Doesn't work, take the loss, get out. It works, take the money, and then move to the next one. So I made 500 grand, and then I'm going, okay, what am I doing now? And I know that sounds nuts, but that's kind of where I've gotten. And I think that's what's made me such an effective trader is that I literally don't care about money anymore. Because I have enough faith that, I have the skills where I will find a trade. So if something's not working for me, like I said, prior to going to surgery a couple months ago, I was down 15, 20% of my account. I was trying to buy Lyft early. I was trying to buy IBM early. They weren't working out, and I was just dumping these trades. And all of a sudden I'm looking at a 15, 20% loss. But I kind of get excited because the more I'm losing, I know the closer I am to, getting, something right. Where, I know what I'm looking at. When I was looking at Lyft, I knew it was going to go. It's just a question of, waiting for when it was right to do so. So let me kind of break it apart and show you how I kind of look at something from a high level and, try and surmise where the next major direction is going to go. So again, I don't try and look at, an individual bar, set up, in front of my screen for the next 3 hours, put my moving indicators, my Bollinger Bands, look at volume, whatever. This is all I look at, price and time. So this is what I call a clean or a naked chart, because you don't see moving averages. You don't see Bollinger Bands. You don't see volume. You don't have anything on here of what we call indicators. Because to me, indicators, it's kind of like driving, looking in the rear view mirror. Indicators are about what happened yesterday. It's not about what's going to happen tomorrow. So all I look at is this picture. And from this picture, I have made millions of dollars. And again, it was very simple. And you go back to my videos in late 2016 and early 2017, I was shouting from the foothills that this pair, the pound versus New Zealand dollar, kind of a, off the radar kind of pair, was going to make a monster move higher. Now, I don't have any special, insight into the Bank of England or the Bank of New Zealand. all I could see was this very simple long-term double bottom price pattern where the market careened lower, made an all-time new low, bounced off this low, retested the low, and when it came through what we call the neckline, which is simply the line that connects through the pattern, this told me that this thing had bottomed. Now, I've been trading long enough where I can kind of see these things happening in my sleep. So I don't wait until it kind of comes through here. I could already see from a series of what I call price action all the way down here that this thing was going to turn. And again, I invite you to go and listen to, my YouTube channel and, all of my prior emails. I was yelling from the foothills right here, right when it made an all-time low, that particular, and this is a weekly chart. So that means each one of these price bars represents 1 week. And so when this pound versus New Zealand dollar made an all-time new low, multi-year low, by the end of the week, it closed 1,000 pips higher, right on the high of the weekly bar. So notwithstanding the fact that pound New Zealand made a new low, by the end of the week, the buyers were in control. And then when it came back and made the second low right here, I knew what the game was. You can see the price action. It made a new low here and then closed on the high. Made a new low, closed on the high. And when I see these reversals coinciding right with the pattern, then I just load up the boat. I know what's going on. I was advising our members. We all bailed in right here, on this reversal. I think it was like 175.09 in March of 2018. And this thing went to 189 and added to our positions and made a boatload of money. Then this market kind of came back and retested the neckline, which is what patterns do. And when they retest and take off, that's when you know it's good. So you can see what was old resistance at 180 has now become new support. And you can see there was a set of bottoms right here. And on this low, I took this on a ride all the way to 211.87. That was my take profit. It was kind of arbitrary. And this was a Sunday night in the heart of the pandemic. It went to 218. I got my take profit hit. It went to 218, 700 pips higher. But by the end of the week, it closed on the low and indicated another move lower. However, let me just get rid of some of this distraction. And then here was another double bottom. And I was saying right here to our members that this is going to launch this thing to another huge move. You can see this double bottom and it had the neckline here. But what I also said at the time, and this was also on one of these webinar series, where I said the same thing, I think, 2 months ago when I did the thing on the NASDAQ, I said, this thing is going to go up, but it's not going to go up immediately. When something comes down as dramatically as this does, it doesn't just, markets just don't bottom and then do that. They need to work and build space and time away from that down move. So this needed to build some space so that it could go up. And so this was the pattern that alerted me that this thing had bottomed and we were going to go higher. And I showed you that I've had this position on for a month at 193.37 and been building positions. But you can see after I said it bottomed, it went 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks sideways. So if you were looking at this, on a 15-minute chart, you would have needed a Dramamine. It was up 200, down 300, up 200. And it did this for 3 months. And this is why I say you cannot trade based on these short-term charts, because you would have been watching it all through this period and, trying to buy the next 50, sell the next 50. By the end of 2 months, your brain is hammered and your account is probably, just hammered also, and you're done. And then all of a sudden on a Wednesday, from nowhere, this thing just shoots up 300 pips. So I waited for a month in this trade while this thing did nothing. And in one session, it went up 300 pips. And you can see now we're just consolidating here. So we hit this natural resistance level last week at 198. The market turned back a little bit from the 198, but the more it kind of hangs out here, I'm telling you, this is where this is going to be. Now, how do I know that? I mean, stuff could happen. We could have new coronavirus. We could have, any probability. But the thing is, the markets point to where these things are going to go. This thing has been in a long-term consolidation, and this is in a stealth bull market. So the next move is going to be a huge one. And, I've said this on, every one of these things for the last couple of them. I started getting long right when I saw this, and I knew it wouldn't be a quick turnaround. But I just been hanging around long in here and waiting. And every time this thing puts on a reversal, made a new low, close on the high, made a new low, close on the high. This is what I call key reversals. And what I mean by key reversal is simply an observation of where a market closes relative to its high. Now, this is a weekly chart. So this means that this is, the range for a week. And you can see, well, it closed closer to the high than the low. So, in the top quartile. And so when these reversals occur, they actually point. You can see right here was a reversal. Made a new low, close on the high, made a new low, close on the high. Even though these bars were red, I think you'll agree, both of these weekly bars close right on the high. Sorry, I meant to grab another color here. Right on the high of their week. So as they made a new low, they closed on the high. But it did so right at a key juncture. And so this reversal pointed to a mammoth, what was this? 185 to 220. That's a, 3,500 pip move. And so this is what I look for, a combination of patterns and price action that tell me where a market's going to go. So the other thing I look at is what I call an inside bar or a narrow range bar. And I don't really care where these narrow range bars close. All that this really represents to me is a storing of energy. So you can see that this inside bar, and the reason why we call it an inside bar is because literally the range from low to high or high to low sits within the range of the previous day. So we call this a narrow range bar or an inside day bar, or in this case, it's an inside week bar. But what this represents is a storing of energy. And if you can understand where the energy is going to go to by virtue of the trend or the pattern, then you can understand how the energy is going to unleash. So the metaphor I always use for the storing of energy is, picture if you put your hand on top of a beach ball, and then you push that beach ball further and further underwater, and then you let your hand off. What's going to happen? This thing's just going to uncork, right? The energy is just going to make it explode out of the water. And that's how I look at these inside bars. So, just for, let's just say, this week, this is the range for the week. So we can say that this is an inside week bar. Now, I know it's only Monday. We don't know where this thing's going to, but what I'm saying is this would represent a coil or a storing of energy. And since by virtue of the double bottom here, the double bottom there, the double bottom there, and the fact that this is in a stealth bull market, I'm surmising that this thing is going to go higher. So the way I try and catch these things is through a trade execution plan where I would simply put a buy stop. And I don't know if you guys, a buy stop is simply a stop, an order that becomes a market order if it's triggered and it basically sits above where the market is now. So I would take whatever the high is of this week and put my buy stop somewhere above that high. And then I would require the market to confirm what I'm looking at. So let's say the next week it opens and it just goes lower. And I was wrong. And I love these. I love when I'm wrong and then I'm not put into the market. So instead of like waiting on Sunday for this thing to open and then I jump right in and then I find out I'm wrong, I wait for the market to put me in at the time and price. So even though it's higher and I might have to pay more, I might put this order on Sunday and it could get triggered on Wednesday, but it's going to put me in at a time and price where it's ready to go. So this is a 4-step plan to get you in the right side of monster moves. And again, if we're going to have one of these moves, all I'm trying to do is take a piece out of the middle. 300, 400, 500 pips, whatever it is of that move. And this is what, I do all the time. And if I don't see these trades, I simply don't trade. I don't put on an FX trade unless I can see 150 pip profit. Why? Because I'm trying to set up my trades where I have a 3-to-1 risk reward ratio. So what does that mean? That means if let's say my average risk is 50 pips, it's actually probably higher. It's about 60, 75 pips. And people say, well, I can't take a 50 pip risk with, my trades. And, and the answer is, of course you can't, because your position size is too big. But if you reduce your position size, you can. So if I'm going to take a 50 pip risk, I want to see that I have 150 pip reward outcome, 3-to-1. Now, again, this is very different with the way most people are trading. So if you're trading in and out on a 15-minute bar, by definition, your objectives are much smaller. You're looking for 15 pip moves, 20 pip moves, 7 pips moves, whatever you are. But if you're, trying to make 15 pips, you got to risk 10 to 15 pips. You also got to pay the broker spread of 2 to 3 pips. Don't forget about that. And so now you just have a 1-to-1 or even a less than a 1-to-1 outcome. So when you're trading this way, you have to be 90% correct in your bets. And then you have to do that forever. Now, who's going to do this forever? The answer is no one. And that's why 90% of people are losing money. The statistics are terrible. It's estimated that 90%, I would guess it's probably 95 or 98% of people are going to lose their money in the first 3 months, because their objectives, what they're trying to do is it just rewards the broker. So the more time you're trading in and out and paying this 2 to 3 pip spread, even though it's part of the spread, you don't see it. It's a cost of doing business, and your broker is collecting this every time you trade. So if you're trading, 5 times a day, that means, 25 days a month, you're trading in and out 125 times, paying that 2 pips. And that's why you'll eventually just hemorrhage and bleed to death. And that's why these expert advisors don't work either, because they're take profit. And that's what you should do. When you see an expert advisor, what you should look at is, what is their average profit per trade? And you'll see it's like 5 pips or 7 pips or whatever it is. You can't trade like that. And then one day they don't recognize the market, and then one trade loses 87 pips and you lose all of your money. So you have a 90% winning record, but you've lost all your money. Now I can show you that there's been years where I haven't won 50% of the time in any given month. And yet I've made hundreds and thousands of millions of dollars. Because if you have a 3-to-1 risk reward ratio, you can actually lose 72% of your money, 72% of your trades. Think about that. So everyone asked me, so what is your win-loss percentage? And that is an irrelevant question. It doesn't get at anything. If I told you that I won 35% of my trades, you'd run a mile from me and say, frick, I don't want that. I'm going to go to a real money manager. But I'll show you how, when I win, I win huge. And when I lose, it's like, I just dump it in the trash can and move on. So this is really the holy grail. Everyone worries about, perfection. Where do I get in? What's the best entry? It doesn't matter. In fact, we could all get in at the same time. I could tell you to get in pound New Zealand today. 10 of us bail in today. Now the question is, where will the 10 of us be a month from now? If this thing goes down 80 pips after you get in, are you going to get scared and bail out? Or if it goes up 80 pips and you say, wow, man, I've never had 80 pips profit in my life, and I get out, or I'm going to be up here. So it's not about entry. Everybody romanticizes, if I just had the system that gets me in the right trade. It has nothing to do with that. It's, about a process. It's about catching the right moves. And you don't have to catch all of them. You can lose 72% of your trades and be a huge winner in this business. So hopefully that, opens your eyes to some of the reality. So Mustafa says, Mark will make you a great trader, but you have to listen and learn. So thanks for your support all the time, Mustafa. So I'm not really reading these, chat posts right now. So does this make sense to you? Does this, can you see if you were able to identify certain points on the thing and just take huge pieces out of the middle of moves? So even if I get a piece of that move, that's 300 pips. So Pedro says, makes a lot of sense. Chad says yes. Ade says yes. So it's coming in so fast. Alex says yes. Michael says, yes, Mark, you do make sense. Payam says, hell yeah, but it's really hard for me to stay in trades. And so that's what I get all the time. You go, Mark, I don't know how you have the balls, to stay in these trades. I don't know how you have the courage to stay in these trades. And to me, it's like, it's trading for dummies. It's the cheat sheet. The market tells you. And so when I see a pattern like this, so I've been telling people about the pound New Zealand for years, and obviously it's been a difficult thing. It's had huge counter trend trades, which I also have traded the eyeballs out of. But, when I understand what's going on, sorry, I'm just trying to clean up some of this stuff. So this to me is what I call the governing pattern. Now you'll notice this took place 5 years ago. So if you're looking at a 15-minute chart or a 4-hour chart or even a daily chart, you have no clue about this. And this is what is governing this market. So guess what? Every time this thing sells off, I know I have another opportunity. It's kind of not fair. I just know what's going on. When it comes down here, I go, okay, we're going to take another ride. When it comes down here, I know we're going for another ride. And this time I get the sense we're going for a big ride. And so why would I get out? So last week we went to 198 and then this thing promptly came off and sold off 200 pips, 196. And so if you're looking at that on a 15-minute chart, it looks freaking frightening. It looks like a carnival ride, right? So you just see this thing, careening lower, on a 15-minute chart, and you go, whoa, this looks like a tsunami. I got to get out of this thing. I just bought more. This is the gift that keeps on giving. I just bought some more. Because this tells me that this is likely to go higher. So you have this double bottom, you have this inverted head and shoulders, and the market just, all it did was hit a very logical resistance level. Whenever you come to one level that results in a huge sell-off and you come there again, the market just doesn't go through there like a knife through butter. And I know that at the time. And, it's easy. I could have, gotten out and this and that. But I'm in this move for that. So, I got in at 193.37 here. I'm holding on to a 300 pip move. So it came back up on me a couple hundred pips. I was making 500, now I'm making 300. But my objective is this. And again, people say, well, you have the courage. How do you stay in these things? Because this tells me what's going on here. Not this 15-minute. Anything can happen on a 15-minute chart. The market can go anywhere in the next 15 minutes or 4 hours or 2 days. But, what's going to happen over the next several days and the next several weeks? That's what I'm looking at. So I know there's probably been a lot of questions, and I'm just seeing a ton of stuff coming through in the chat box. So Alan says, so what does someone with a small account do? And so that's an excellent question. And people say, well, I can't trade like you because I don't have your money. Well, guess what? I started off with freaking nothing. And it doesn't have anything to, so in order to catch a move, so I forgot what my stop was. So let me go to, so when I put out my email, the buy stop was at 193.37 and the stop loss was 191.87. So I'm terrible at math. I think that's what, 150 pip stop loss. And so now you've never been told in your life to take 150 pip stop loss. And you're saying to yourself, how could I can't take a stop loss of 150 pips. It would wipe me out. Of course it would, because you got to reduce your position size. And then I had a take profit of 199.87. Now the take profits are always arbitrary. I think that this thing is going to 208 or 215. So I just put that, 199. And if the market went up 600 pips, the week after I put it in, I go, well, thank you very much. I'll take 600 pips. So what I do is I put my order in, and then I see how the market responds to what I'm looking at. And now that the market is going in my favor, then I keep putting my take profit further and further away. So this is not like an expert advisor where you just see one stop loss, one take profit, and that's it. If the market is dynamically moving in my favor, why am I going to stop it from making me more money? So let's take this example. We have 150 pip stop loss. And now you're saying, well, I only have a small account. I can't do that. Well, I'm going to show you, yes, you can. So here is a position size calculator. Let me just copy it. I'm going to put it in the chat box here. And so you don't have to scribble it. So just hang on one second. So there is that calculator. Now you should never not understand the risk that you're going into any given trade. So here is what's called a position size calculator. And it means exactly what it says. It's going to help you put on the right size position for a given amount of risk for your account size. So I don't care if you've got a $2,000 account, a $20,000 account, or a $200,000 account. Your risk is always going to be the same percentage of your account. So then I come to the drop-down menu, look for, where's the pound New Zealand, right? Then this calculator will let you calculate this in major currencies around the world. So wherever you are, you can use this calculator. And I'm just going to, for the sake of the example, we'll use a US dollar account. So let's start off with a $2,000 account size. Doesn't matter. Doesn't matter if it's 2,000, 20,000, 200,000. You're still going to be risking, let's say, I say risk 0.5%. 0.5%. So 0.5%, and it's expressed as 0.5. If you want to change it to 1.0, you want to get a little bit more aggressive, go 1.5. You're still not going to wipe yourself out. But if you trade with 0.5% risk, you would need to have 200 losing trades in a row to wipe yourself out. So, that would just tell you that you shouldn't be trading. So in this way, I could give you 10 bad trades in a row at 0.5% risk. And so you've lost 5% of your account. And then the one trade, I could make you 15%. So now you have a string of 11 trades. You've only won 1 out of 11. And you're up, 6 or 8%. And so this is how the pros do it. It's all about risk. It's not about where you get in the market. It's not about entry. It's about risk. So let's go back to the example where we had pound New Zealand dollar, and I was going to risk 150 pips. Now, there's a contract size here, and on a $2,000 account, you probably should be trading with a mini account or a micro account, which is a 1,000 lot. Let's say you're trading with a mini lot, which is a 10,000 unit account. You hit calculate, and this will tell you how many lots you can trade for a given percentage of risk for your account size. So in this example, we're taking 150. So let's say the wheels come off, the world ends, I'm completely wrong. We get smacked on this 150 pip trade. Awful. I lost 150 pips. Guess what? You lost $10 of your $2,000 or 0.5%, and you'll live to fight another day. It doesn't matter that you got cleaned out on a 150 pip loss. But this is how you need to keep your stop losses wide, because the noise in these markets are so big. And that's part of the thing. People are trading with 10 pip stop losses in a market that's going up and down 200-300 pips. So this is the daily of the pound New Zealand. I was showing you the weekly. This is the daily, where each one of these sessions represent 124 hours. So I'm not going to give you a lot of history. All I need to do is show you what I was looking at on the weekly, and now you see it on the daily. This huge double bottom. But here's the thing with the market. So I always compare the market to a magician, right? So a magician doesn't just show up on stage and pull a rabbit out of the hat and the show's over, right? He's trying to distract you with his left hand, throw you off, and then pull a rabbit out with the hat with the right hand. That to me is what the market does, because look, I knew this thing had bottomed right here. But I also knew, by virtue of this huge downtrend, that it wasn't just going to go up like this. And I said to people, we bottomed, but this is going to take some time. And so you can see there was this giant thrashing around for 9 weeks. We saw it on the weekly chart. Now, if you're trading this with a 15 pip stop or a 30 pip stop or a 75 pip stop or even 110, you're just going to be banged out, right? It goes down here, it goes up here, it goes down here, it goes up there, then it's down there, then it's up there. So you can see, how in the world are you going to trade this thing with a 30 pip stop loss or a 50 pip? So, that's why I gave it 150 pip berth when I got in, around the 193, which is around somewhere in here. So you have to give the trade. If you look, I am trying to make 1,000 pips out of this trade. So why would I want to, try and make 1,000 pips with a 20 pip stop loss? Does that make sense? If I'm trying to make 1,000 pips, am I going to try and risk 20 pips to make 1,000? No, I have to give this thing room. So when you're trying to make these bigger moves and stick around where you don't get wiped out by the noise, you have to. So intentionally, I just arbitrarily, when I got in, I knew that, it could, have these fluctuations, and I didn't want to get bumped out by the noise. This is what I call noise, right? All this meaningless crap that you watch for days and weeks, and then all of a sudden in one day it does that. To me, it wasn't a surprise. I hate to say it, sounds arrogant. I knew it was going to do that. I was telling people I was going to do that. I send my emails to thousands of our members telling them where it's going to go. I have, 3 positions pound New Zealand. I'm making 100K in it right now. And I think it's going to go a lot higher. So now here's kind of the challenge that we get to. Here's a perfect double top. Make it 2 highs. And then you also have this, key reversal price action where you made a new high, closing the low, made a new high. And typically, these point in the direction it wants to go. So it can get very confusing. And now you have to figure out, well, how do I know the difference? So what I'm going to tell you is you have to sign up to the pattern trader, because I've spent 4 decades, kind of understanding where that. So this looks like an opportunity that should do that. But, to my mind, the larger patterns are telling me that it's going to do that. And I can't fit all of this into one discussion. But, this is kind of, what I do. So now you have a series, and this is real time, by the way. This is exactly what happened today. We have a narrow range bar. You can see the high and low is within the high and low of the previous day. So this, to me, would be a legitimate point if you were aggressive and wanted to add to your trade. So I got in at 193.37. I told our members to get in at 196.51. And now if you're really aggressive, you could actually add to your trade by putting a buy stop right above these 2 highs. And guess what? The market will then confirm. If you're wrong and it just goes down, no harm, no foul. You're not put into the trade. But, if by chance 2 in the morning, you put in the trade, you could wake up and find that. And then I always have a stop loss behind it. And the neat thing about these narrow range bars, so you could put a buy stop there and a sell stop here. This is your risk, and you could have just a ballistic reward. Imre says, I think 98% of the traders here have only $1,000 or $2,000 to trade. So to me, this isn't about how much you have in your account. This is about how much is the value of knowledge, right? If somebody had come along to me when I started trading and offered this to me, I've spent 40 years making so many mistakes, falling into ditches, thinking this was a double top, falling for that gag, And so what is the value of knowledge? So in 2000, when I started, I was freaking broke. I was wiped out by a lawsuit with the US government because I was betrayed by my brother. I mean, just ridiculous story. I had a brand new son, who I love to death. And I had a few grand in my account, and I didn't know what I was going to do. So I had this baby that I was babysitting at home. My wife went to work, and I just started doing what I'd been doing for 20 years prior. I started looking at the markets and doing what I do. And I took under $10,000 to many multiples of that since then. So, it's not what you have in your bank account, it's what you have in your head. Yes, Keith, the webinar is being live streamed on YouTube. Michael says, you're right, Mark, knowledge is the key. Then as a trader, it's up to you. So why are Google and Facebook the most valuable companies on the planet? Because they have knowledge, they have data, right? So I remember 40 years ago, where, every week we would get something called TV Guide, right? We didn't have Comcast and all these things where you get the guide on your television. We'd get a book telling you, what shows were going to be on that week. And I remember, and it never left me. And I remember seeing some article that said, TV Guide is worth more than Boeing, the airplane company. And it just blew me away. Why? Because it had data, it had knowledge, where, Boeing is about fixed assets. The value of knowledge is infinite. So, sorry, there's so many comments coming in. I can't see them all, and then they just move. Mustafa says, so Jim says, what's the setup? So this is pound versus New Zealand dollar. So this is a great example of what I look for. So I open this chart, and what do I see? So first off, I see a market that's in an uptrend, right? It's, since December, I don't think we can argue. If I said to a 6-year-old kid, is this market going up or down? And since December, it's 185, and now it's 197. This is an uptrend. What started this trend was a pattern, this double bottom or this W. Once it crossed this neckline, it told you, it confirmed that this thing was a double bottom and going to go higher. So this is an uptrend. Now you need to figure out, how do I get, in this uptrend? And so I use a combination of what I call key reversals. So you see this thing right here, made a new low, close on the high. So this thing is pointing where it wants to go. Now, in the last few days, it's just been churning. Then you also have this inside bar. So I use a combination of key reversals and inside bars to get me in the momentum. So this really is the holy grail of trading. If I told you, where to get in and what your risk is, that knowledge is the holy grail of trading. Where to get in and how to establish or quantify your risk. And you're looking at it right here. So I think this is going this way. We'll see. So this is what I look at. I look at a 4-step thing. What's the market doing? Is there a pattern? Is there a set of what I call insurance day bars? And I call these key reversals or inside day bars, I call them insurance day bars. Now that's my own phraseology. If somebody steals it out there, believe this is, the reason I call it insurance day bar is because to me, insurance has been taken out. these sellers already established the low for me. They told me where the low was. So if I get in here, I know where the risk is. If I put my risk underneath here, it's very likely that unlikely I'm going to get taken out. And they also tell me where to get in. So once I understand the pattern or the trend before this, then I see this, key reversal inside day bar, and then I just layer it with a execution where I put my buy stop right there. And then I let the market run into me whenever it's going to do it. I don't sit watching it for the next 5 hours and use some Bollinger Band to figure it out. I just put my buy stop there and let the market put me in when it's ready to go. And then I've got my stop loss, underneath it. So here's my risk and there's my reward. And if it's 3 to 1, you're going to make a lot of money over time. So Terry says, what about the red double tops? I kind of talked about that. And this is where the market lays traps. And I said, I'm very good at, spotting the opportunities, but I think I'm, become very adept at also understanding where the traps are. So this is a false trap. This is a double top. If I saw this on some other chart, I might be willing to short that, if it had some other thing. But this to me, so this is the magician, right? Trying to deceive you, trying to shake you. So the market's always trying to shake the weak hands before it gets going. So how many times, have you tried getting into this trade, for 5-6 days, and then, 6 days later, it's up here. And you're going, shit, I was in this thing a million times and now it goes. How many times has that happened to you guys? And so this is a natural point. You can see right here, this is the natural resistance where, this key reversal right there, you just came to this point. So what I try and do is try and keep my eyes on what I call the governing pattern. This to me is the pattern that is going to govern and dictate behavior. Now, you could still get some kind of, something like this out of here. And then I would just wait for something like this and get aboard this thing. So it may not be right now, but this thing's going to go up. Pound New Zealand's not easy. It's like a bucking bronco. It's it's not easy. But if you want to make 1,000 pips, what's easy, right? You want to make a monster amount of money. The market's not just going to give it to you. Actually, it does. All you have to do is be willing to sit through this crap and not look at it. But nobody can do that. So Imre says, I think it's going to come back to 195. Maybe. I would take a bet on that. I don't think so. Casey says, what day will the live trading start? Well, that day is today. This is a live real-time chart. I just took a snapshot of the real-time chart. This is the real-time prices of pound versus New Zealand dollar. So I'm showing you a real-time chart, and I'm showing you, Matt says it's boring, I'm leaving. Good luck to you, Matt. Take off. Terry says, so do you mean you will stack your trades if it goes lower as the long-term trend is up? Yes. So somebody says, can you give us another chart to look at? So again, if you understand this, this will put you toward a long way. So it's you open a chart and you first say, what is the phase or the condition of this market? Well, this is an uptrending market. Is there a pattern? Yes. Is there an insurance day bar? Yes. How do I layer it with an execution plan that puts a buy stop? So I will, at some point during the week, I'll give you something where you can, have this 4-step trading plan in your hands and understand it. But I'm giving you exactly what I'm doing on the live charts. And, I'll just take a snapshot right now of my account. And I got so much crap in the way here. So I'm just trying to move these windows out so I can. Here we go. So this is a live window of exactly what's happening in the market and my open positions. So you can see I've got 3 open positions in pound New Zealand: 93.28, 96.71, 96.79, and I'm making 112,000 on the one that I bought way back in early March, 3 weeks ago. I'm losing 25 grand on the one that I bought recently, and I'm making $1,000 on one that I just bought a few days ago. So that is live. Everything I'm doing is live. This is the live chart of the British pound versus New Zealand dollar. All right, so are there any questions? Livia says, I never use bars, but candles and Heikin-Ashi. So, maybe I'm just old and outdated, but to me, when I see these bars, they tell me a picture. With candles, it gets too crowded and I can't really see what's going on. So when I look at this, I can see very clearly, these bars stand out. Made a new low, close on the high. Made a new low, close on the high. Made a new low, close on the high. These bars point in. After I see this pattern, then I can see right here, to me, this is the controlling soldier. So it's very easy to take your eyes off the ball and see this. These two, this double top closes on the low. And ordinarily, this would be very bearish for me. If I saw this on some chart and it was at the top, I would get excited that I've seen a top in the market. But this is, why I distinguish, because I think this pattern is controlling everything, not this. This is just short term. I think we'll come out of here. And frankly, I think you won't see this low right here. This guy, this is the soldier that is going to defend these prices. So it might take a while to get out of here, but I don't think we're going to get under this low, whatever that is. So there, that key reversal, made a new low, close on the high, is pointing in the direction it wants to go. So are there any, John says, how many trade setups do you give each week? So to me, it's really not the quantity of the trades, it's the quality. So I give trades whenever I see something. Sometimes it's 2 trades a day. Sometimes there are no trades at all. And, look, the good trades don't come, by every day, every week, or even every month. Frankly, when I look back, I make all of my money on like 3 trades a year. Lyft, I made several $100,000. Shorting the NASDAQ, I'm already done for the year. I've made, more trades in the last couple of weeks than, and so I don't care if, another trade doesn't come along for the next 2 months. I doubt that will be. There's always some trade that's happening. But it's a whole different mentality. Rather than looking for a trade every minute or looking for the bump or the rush, I'm looking for the trades that are going to take me for a ride. Like I said, I'm looking for the piece of the middle out of a monster trade, right? So let me just put some time on this, put some perspective on this. So this is the pound versus New Zealand dollar. And I saw this double bottom right here. I started entering this trade, all the way down here. And I'm looking for this. Now, this could take a while. And all I'm trying to do is take a piece out of that. And so this isn't every day, every week, whatever. You don't get these monster trades all the time. This may take time. Might just dick around for a few weeks here. but I will be there when it's up there. And this is really my objective. This is really what I try and, and say, look, if you have a huge move like this, I just want a piece out of the middle. And I've been able to do a little bit better than that recently, where I picked the bottoms and tops of, certain trades. So let's see, there's a bunch of questions that have come in here. How do you manage CFDs on pound New Zealand? There's a huge spread right now. So in the nights, when the market closes around 5 p.m. Eastern time for about an hour, the brokers, do their whole adjustments, and then the spreads widen. Pound New Zealand will go from 3 or 5 pips normally to 17 pips. So you don't want to trade that. So just wait an hour, and then you can trade. So typically I wait till after 6 o'clock Eastern time, and then I just put a buy stop above wherever the market is right now. So whatever that high is today on pound New Zealand, I'd put it like 10 pips above there. But just wait, because you could get ticked in by the broker spread. So Robert says, do you ever close your trades or just let it run until it hits your stop? So obviously, I close out my trades, but I try and let the market tell me when to close out. So, Graham Loving, my mentor, always used to say, the market puts me in and the market takes me out. So this pattern put me in. And so I would have to see some corresponding pattern, some head and shoulder or something that would suggest that, that I should get out. Now there are always going to be levels. So now the market has hit this level. It's going to, congest here for a while. And then I anticipate it's going to hit there. And then it'll probably bounce off that level. And then, this is what the market does. It just, and I call this kind of the elastic band, right? So in order to go forward, it's like an elastic band. You pull back on it to create the energy before it releases. And so I use these pullbacks, and find some key reversal as an opportunity to get in the direction. So the first thing is understanding, where do you need to be faced? Is this thing going up, or is it going down? So that's the first decision you need to make. Once you understand that, then you want to just get in sync with whatever this thing is doing. And, I use, a combination of, trade execution and things of that nature to get in, the trend. But really what I'm trying to do is take a piece out of the middle. 300 pips, 500 pips, 150 pips on some. Some trades you just have to accept the scraps. They don't move that, far. It's not every day you're going to get a trade where you can make 1,000 pips. I think this is a trade where you're going to make 1,000 pips from here. I do believe you will see it there. Luke says, can we get a recording? I'm not sure if this is recording. If you want to, it's being live streamed on YouTube, so you can see it there, or you can send an email to support@thepatterntrader.com. Did I say that right? Support, yeah. So there's the link. So if you want a recording, it's right there. Casey says, I've heard of you and found numerous negative reviews. Can you give me some information that would help me trust you besides Trustpilot? That's what I'm trying. So really, I could be full of shit, right? But what I'm telling you, just take the information. This is a free webinar. I'm giving my time for free, and I'm showing snapshots of my live account. And it's amazing. Some people just can't accept that. I'm giving a free webinar. I'm giving you every tool you would ever need to make a lot of money in your life. And if you don't like me or my personality, then, that's all good. I don't know what else to say. Really just look at the information I'm sharing. And let's see what happens. We're going to be on this for 4 days. Let's see what happens in the pound New Zealand dollar. And by Thursday, if it's up here, it's going to be hard to call me a scammer. So DW says, don't listen to them. They're just haters. Yeah, I always take the bait, because I don't know. I'm a very emotional, sensitive, person. And I know the internet is that's why I never, ever go to Facebook. I never, ever read a review. I get so bummed out from it. And so, on the other hand, I do understand that this world is so filled now with misrepresentation and fraud that we literally don't know whether to believe our lying eyes. What really can you believe anymore? Everything seems to be concocted and made up by politicians, by people that we used to be able to trust. And so if I'm sitting on the other side of this webinar, and some guy says he's making, millions of dollars, I'm automatically thinking he's full of shit. I am. And so I don't blame you. And all I can really do, go to my videos, go and look what I say, and then look what happens. When I tell you Lyft is, going to go higher at $46, and now it's at $65, and I've made hundreds of thousands of dollars, what are you going to say? So here's, Lyft. I'm trying to let me go to the weekly. So to me, a picture's worth 1,000 words. Now, I was telling my wife for weeks, during the time when, the market was going crazy and Lyft was really doing nothing. And it was really it was also the second cousin to Uber. Uber was the stellar performer in this ride sharing space. But I'm going, I really understand the stock of Lyft. So for weeks, I was telling my wife, this is the best risk reward opportunity I've seen in a long time. And this was way back months and months ago in the early part of the year. Why? Because, the whole history of Lyft is that it's formed a perfect double bottom. So the whole history was this thing came careening lower, hit a bottom, bounced off the bottom, hit another bottom, bounced through it. And when we connect the whole thing, this is called the neckline. So this is like the pound New Zealand dollar. So this is what I'm saying. It doesn't matter what you're trading. If you're trading potatoes or cocoa or, live hogs or the euro yen or whatever, when you see a pattern, the pattern means the same thing. In fact, the greatest trader that I know never looked at even what he was trading on the chart. So now if I handed you this chart, it could be of anything. But if I saw this chart, I'd say, I'm just freaking buying this thing. And that's the lunacy of it. I buy charts. I put millions of dollars. You saw that I was short $2 million worth of Zoom. I have no idea sometimes of what the company even does. Never mind its earnings or its projections or whatever. I just look at a picture like this, and this is all I need to know. So this is a weekly chart. And, after it broke out, Lyft started going higher. And I started taking nibbles at it. And I'd lose, and then I'd take another nibble, and I'd lose. And I ended up losing 15 to 20% of my account, buying Lyft, buying IBM, couldn't make a trade right, in a month's period. And then I saw, this is what markets do. They break out of the neckline, and when they retest it, they come back and retest the neckline. When they retest it, that's when it's good. And that's exactly what happened. And I was one day out of a major surgery in New Jersey, sitting in my hotel room saying that I can't trade, I don't want the stress. And then I saw the double bottom right here on the daily. And this is when I started getting in the, in the stock. $45. I got in the $46 calls. I got in the $47 calls. By the end of the week, it was trading at 53. I made 700% on the $46 calls that I bought for $1. I bailed out for $7. And you can see that it's just in this uptrend. And it's eventually going to make a new high. How do I know that? Well, the pattern tells me. So Imre says, I followed you for more than a year now, and I regret why I didn't take a few of your good trades. I really believe long-term trading is less stressful and more profitable compared to the stress of daily trading. From David Imre. So I will trade anything. I'll trade anything that has a price history. I'll trade interest rate futures. I'll trade anything. To me, a picture's worth 1,000 words. And so once I see a picture, then I look for a combination of, my reversals, my inside day bars, something that puts me back in the momentum of the trend. So I would love Lyft to sell off here. I would love it to give me another bite at the apple. Well, I eventually know it's going higher. All right, so it's about an hour and a half. I don't want to, exhaust it all in one session. I know there's a bunch of things coming in on YouTube. Let me just see what's going on there. Yana says, Mark does show his live trades. For anyone who's watched his live videos knows this. Thank you, Yana, for coming to my defense here. Brian says he's explaining his system just like he has for a long time. He doesn't change his system and it works for him. If it doesn't find out. So what I say to everybody, hey, look, this works for me, but it may not, it probably won't work for you. You have to have a certain outlook and disposition. You have to be able to sit in a trade for a week when it doesn't go anywhere and understand that it's just part of the process. So just because 1, 2, 3, 4, 5, 6, 7, 8 weeks, this thing went lower, went sideways to lower. And to me, this was just the opportunity. So when I get sell-offs in something I know where it's going, that's just to manna from heaven, right? I don't stress out. So just to put this in perspective, once I understand that this is the governing pattern a few weeks ago, and I know when it was January 28th because I had surgery January 26th. I'm sitting in my freaking hotel room and, I'm saying I can't, put myself under stress, but I was waiting 2 months for this. And I go, I can't not take this. My wife says to me, why do you have to trade every day? I go, because, the market gives you an opportunity. And then if you miss it, you miss it. So right here was this, and this looks just like the double bottom in pound New Zealand. We have, 2 lows with the close right at the low. And then you had a combination of, so for me, the governing pattern was what you saw on the weekly. It was this huge double bottom that you saw on the weekly. So that was governing or dictating where this thing was going to go. So the fact that this thing just sold off to me was just an opportunity. And so I saw a combination right here of this little double bottom at $45. And then you can see the inside bar right here. You can see this narrow range bar right there. And that's where I started going nuts. I said, any break above this thing's going to explode. And that's exactly what it did. I bought the stock. I bought the options. I think I showed you. Where was this thing? So there were all the transactions I was doing. 45.68, where was the date? It was 128. So I had surgery on the 26th, 2 days after surgery. So this was January 28th. Bought 5,000 shares, bought 1,000 shares, bought 2,000 shares. I bought 7,500 shares in all. Then I was buying the calls for 92 cents for the 46 series and at 110 for the 47. And I bailed out of those at $6 and $7 respectively. Made anywhere from 760% profit to 450% in 3 days. Based on this setup right here. So this is all I needed. There was no garbage. There was no volume. There was no news. I wasn't, consulting with some guru. This is all I was looking at. This long-term price history told me this double bottom was, this thing had bottomed. And now I was just looking for a way to hitch a ride, no pun intended, on this ride-sharing platform. And so, this is where I got in, right at the low. So I always say, I think this is one of my strategic skills, is that I understand, when a market is bottoming or topping and what the characteristics are. And if you can get in early, that's when you make the big money. When markets come from here to there and you load up on derivatives and, all kinds of stuff, that's where you make the big money. And I must have made, $500,000 in that little play there. Bert, you're welcome. So Dira on YouTube says, all he is saying makes sense to anyone who understands reversal patterns and trends. So look, what I say is you can find all of these patterns in a textbook or on websites. But, the market, the reality is very different because the market throws you patterns all the time. Like we saw in pound New Zealand. Why is that not a double top at 198? Why do I not think it's a double top there? Why is this not a head? And so right here, it would be very legitimate to say, hey, here's a double top and a head and shoulders, a massive bear price pattern. And guess what? It just penetrated below the neckline, closed below here. So now this is a giant sell. You have the double bottom, you have the head and shoulders. Why is this not a great bear pattern that's going to do that? So it took me many, many years to understand how to capitalize on the opportunities, but the market throws you 1,000 different misdirects to get the weak hands out or the hands that really don't understand, what they're looking at. So, why is one pattern different from the other? And the real answer is because this is the governing price pattern, not this. Here's a double top right here. Well, why is this not a double top? Why is this not going to do that? All right, guys, I think I'm going to leave you there. Before I leave, when I send out my emails, and I send them out each and every day, and I think I showed you basically what they look like. So basically, I always tell you or show you what I'm looking at on the chart because this is not a signal system or a managed account, right? I'm not just, if you send me your money and said, hey, Mark, you're a great trader, just place trades for me. What would be the value of that? Even though if you made money, if I get hit by a bus tomorrow, and you don't pick up the skill, what is the value of that? So what I try and do is show you what I'm looking at on the chart, write up the trade, where to buy it, where to put your stop loss, take profit. Then I give you the explanation. And you can see, I said in this thing here, that double bottom right there looked just like the pattern of Lyft when it was around 45 bucks. So it doesn't matter if it's a pound New Zealand or Lyft. They make these technical price patterns. And once you understand them, you can make a piss pot full of dough for yourself. And so what I do is I send out a daily email. And after, you get these enough times, you can start understanding how the markets really work. And I'm going to put the link. There's a video in there if you'd like to watch it. This is how you can join, my elite program, which is a part of an email series that I send every day. It also includes the Master Pattern live sessions on Fridays. And so Jim says to learn the fake out patterns would be cool. So that's half the battle, right? Is that, the market is always throwing you misdirects, before it goes in the direction that it wants to go in. And so sometimes I'll see a key reversal and I'll go, I know what's happening here, but it could then take 3 months, for the thing to go in the direction of that reversal. Ben, I get so many messages and they come so quickly. I don't know which, what was your message? So David, I'll look at the gold chart tomorrow. Um, so Robert says, can Forex patterns be used on indices as well? So you can use these patterns on anything. As I indicated, at the top, I made a whole bunch of dough just recognizing a pattern in the NASDAQ right here. And before I go, maybe I'll just answer Robert's. So again, you can use this analysis on anything. Pork bellies, anything that has a price history, you can use this. So a couple of weeks ago, I was setting up my Master Pattern Trader series on Friday. This is where, we get the weekly closes, and this is what the chart looked at the time. Try and make it a little bit bigger here so we can check it out. So this is the NASDAQ stock index in the United States. It's, market that's been going straight up, but there was a period right here where I was looking at this pattern, and it's called an ascending broadening price pattern. You can't really see it here. It was kind of much more prominent on the daily, but an ascending broadening is basically where the market goes up throughout the pattern, and it starts out narrow and then it broadens out at the top. So I was looking at this ascending broadening pattern, surmising that, what was, going on. And then when I saw this key reversal right here, made a new high and was closing on the low for the week. So on that Friday, I started loading up on these triple Q puts, surmising that we would come at least to the lower support line and maybe not a little bit through it. And that's exactly what occurred. So on that Friday, I bought the 320 puts. The market was trading at 34. And then on Tuesday, the market collapsed. On Monday, the market collapsed. And on Tuesday, the market collapsed. And you can see that, we went straight down that week. And then in the following week, the market went up. And I thought that it was just retesting this thing was going to go down. So I reloaded. And then you can see it then, got shattered again. I made $500,000 on both of these weeks using these put options. I mean, I went a little bit nuts, a bit of a kamikaze play, but it was basically, in recognition of what was happening at the time. Maybe in hindsight, I got a little bit lucky because this is inherently an up market. That was just obviously a dip in an up market. And you can see that the NASDAQ is basically, hewing to this, ascending trend line here. You can see it's just sticking to this ascending thing. And so we may just get, another shot somewhere up here. Again, we're going to retest this high. I imagine there's going to be some turbulence in there, and some opportunities to, but right now, the indexes are difficult. They're just all in the middle. There's a huge rotation. Every day, growth stocks work, and then the next day, momentum stocks work, and then the next day, value stocks work. So you really have to know the stocks that you're working with, because it's just really a muddled picture here. We broke through this 325 resistance here, and now it's just a question of what we're going to do here. And, again, I think that there's going to be an opportunity where there's going to be a tremendous amount of resistance somewhere in here. And so I'll just look for another opportunity to reload at that time. All right, guys, I'm going to love and leave you there. I put the link to my elite program. Let me just put it in there again if you didn't get it. It has a video in there that explains this is not just something you could buy off our website. It's not offered on our website. In fact, you can't just buy it. We have to have a team member contact you and see if you, are qualified or suitable. So with that said, I look forward to seeing you back tomorrow, 4 p.m. Eastern Standard Time. So now I got to write my email for those on my elite list to show them what's been going on today. Lars, you're welcome. Jim, you're welcome. Ahmed, thank you. Margus, thanks a ton. David, you're welcome. And we'll see you all back tomorrow.